6:14 a.m., February 3, 2026, Naval Station Norfolk, Virginia. 14 NCIS special agents moved in 2 columns through the main gate of the largest naval installation in the world. 4 unmarked black Chevrolet Suburbans rolled past the guard post without stopping. The gate guard had been briefed at 05:30. No one else on the base knew they were coming. Total diverted, $61 million. 23 sailors who never existed. 14 months of undetected fraud running through the most secure military payroll system in the United States. The NCIS case file read simply, Operation Hollow Muster. It had started not with a tip, not with surveillance, not with a federal informant. It had started with a woman at a desk, noticing a number that appeared one too many times. What followed would expose a credentialing failure so fundamental that senior Navy officials were eventually called to testify before the Senate Armed Services Committee. It would implicate a former contractor who had retained administrative access to a classified personnel system for 18 months after his employment ended, and it would reveal that the identities of 23 deceased American veterans had been harvested, processed, and used to collect military pay, housing allowances, and reenlistment bonuses every month for over a year, while their families had no idea their names were still drawing a government salary. This is how it unfolded. The payroll reconciliation process at Naval Station Norfolk runs on a 2-week cycle. Disbursement files are generated by the Defense Finance and Accounting Service, cross-referenced against Navy personnel records, and transmitted for final approval to contracted payroll specialists embedded at the installation. The work is meticulous and largely invisible. Most disbursement files contain thousands of entries. Most entries are routine. Most specialists process and close without incident. Auditor T, the name used in subsequent court filings to protect her identity, was a contract payroll specialist who had been working the Norfolk account for 11 months. She was not an investigator. She had no fraud detection training. Her job was reconciliation, matching names to service numbers to accounts, accounts to disbursement amounts, and flagging anything that didn't balance. On January 14, 2026, at approximately 9:40 in the morning, she was working through a benefits disbursement file for a destroyer squadron operating out of Norfolk. The file contained 311 entries. She was somewhere in the middle of it when she noticed something small. A routing number appeared twice in close succession. She made a note and continued. 3 entries later, it appeared again. She scrolled back, then forward. By the time she reached the end of the file, she had counted 23 separate direct deposit entries, 23 different service members, 23 different names, 23 different service numbers, all routing their pay to a single account at a Portsmouth, Virginia credit union. She flagged it in the system as a potential data entry error and sent an internal notification to her supervisor. Her supervisor reviewed the flag the following morning and replied within the hour. The message said it was likely a batch processing error in the DFAS system. Note it in the log and move on. These things happen. Auditor T moved on for approximately 4 hours. Then she pulled the file again. She ran the routing number through the system's lookup tool. The account belonged to a private individual, not a disbursement hub, not a financial institution clearing account, not any of the administrative addresses she had seen used for batch corrections. A personal checking account, registered to a name she did not recognize, located at a credit union 11 miles from the base. She did not send another internal notification. She called NCIS. The NCIS duty officer who took her call that afternoon was Special Agent Dana Reyes, assigned to the Norfolk field office. Reyes later described the initial call in testimony as low signal. A payroll specialist flagging a routing number anomaly was not unusual. Payroll errors in large military disbursement systems were common enough that most resolved without investigation. What changed Reyes's assessment was a single follow-up question she asked before ending the call. She asked Auditor T how long the routing number had been in the system. There was a pause. Auditor T said she would have to check the historical files. She called back 40 minutes later. The routing number had first appeared in the system in October 2025. It had been receiving disbursements, without interruption, for 15 consecutive pay cycles. Reyes opened a preliminary inquiry that same afternoon. The initial phase of any NCIS financial investigation involves what the agency calls source authentication. verifying that the personnel records attached to flagged accounts actually correspond to real, active service members. Reyes and her partner, Special Agent Marcus Whitfield, began pulling the service records for the 23 accounts tied to the Portsmouth routing number. The first 3 records checked out on the surface. Names matched service numbers. Service numbers matched deployment histories. Deployment histories matched the destroyer squadron's operational record. The men existed in the system, had existed in the system for years, and were documented as currently active. Then Whitfield ran a secondary check against Social Security Administration records. The first name came back deceased. Date of death, March 2022. The second name, deceased. Date of death, November 2021. The third name, deceased. Date of death, August 2019. Reyes contacted the Defense Contract Audit Agency before the end of the business day. By the following morning, January 16, 2026, NCIS and DCAA had opened a joint investigation under Operation Hollow Muster. I spent hours going through the case file, and one detail kept nagging at me. Not the scale of the fraud, not the dollar amounts, but the fact that these accounts had survived 15 pay cycles without triggering a single automated flag. 15 cycles. That's not a gap in the system. That's an open door that someone deliberately left unlocked. The investigation team that assembled over the following 48 hours included 6 NCC special agents from the Norfolk field office, 4 DCAA forensic auditors, 2 analysts from Navy Cyber Defense Operations Command, and a liaison from the FBI's Financial Crimes Unit in Richmond. The working group established a secure evidence room at the Norfolk field office and began what would become an 11-week forensic review of the Navy's personnel and payroll systems. The scope of what they found expanded within the first week. All 23 accounts were ghost entries. The service members named in the records did not exist as living individuals. Each had a complete fabricated file: rank, service number, enlistment date, deployment history, medical clearance, and next of kin information. Each was listed as an active E5 or E6. Pay grades carrying base monthly salaries between $2,800 and $3,600, plus basic allowance for housing at the Norfolk rate, which added between $1,800 and $2,200 per month, depending on dependency status. Several of the ghost entries had also received reenlistment bonuses, lump sum payments ranging from $10,000 to $18,000 per individual, dispersed between October 2025 and December 2025. The total monthly disbursement to the 23 ghost accounts was approximately $4.3 million. Over 14 months, the accumulated total reached $61 million. Every dollar had routed through the same Portsmouth credit union account before being moved. The question investigators needed to answer immediately was where it went from there. The credit union cooperated within hours of receiving an emergency subpoena. Account records showed that funds arriving from the Navy disbursement system were typically transferred out within 72 hours of receipt, usually in multiple transactions, structured to stay below federal reporting thresholds. The transfers went to 14 cryptocurrency wallet addresses across 3 different platforms. By January 22nd, NCIS had mapped the basic architecture of the scheme. The ghost identities funneled pay into a single aggregator account, which dispersed funds through structured transfers into a layered cryptocurrency network. Tracing the wallets required coordination with federal prosecutors and platform compliance teams, a process already underway that would take weeks to fully document. The more urgent question was how the ghost identities had gotten into the Navy personnel system in the first place. This is where the investigation shifted from financial forensics to systems security, and where Operation Hollow Muster became something significantly larger than a payroll fraud case. The DCAA forensic auditors identified the insertion point within the first week. All 23 ghost personnel records had been created through the same administrative access credential, a login assigned to a contractor account that had last been used for legitimate purposes in March 2024. The account belonged to a man named Raymond Decker, who had worked as a Navy HR systems contractor from January 2022 through March 2024. His contract had ended. His clearance had been administratively closed, but his system access credential had never been revoked. Decker had used that credential to create 23 fabricated personnel files, but that was only part of what the audit revealed. The investigation had uncovered a credentialing failure 18 months deep, and Decker had not acted alone. Raymond Decker, 51 years old, had worked as an HR systems administrator for a defense contracting firm that held a support services agreement with Naval Station Norfolk. His role had involved maintaining and updating personnel records in the Navy's integrated pay and personnel system, a classified database that, under normal protocols, requires active contract status and periodic re-verification of access credentials. The investigation found that Decker's account had remained active due to a failure in the offboarding process. When his contract ended in March 2024, a separation checklist had been completed and signed. But the step requiring deactivation of his system access credential had been marked complete without the deactivation actually occurring. The credential stayed live. It stayed live for 18 months before Decker used it again. What's most surprising about this case isn't that Decker retained access. It's what investigators found when they reviewed the offboarding records for every contractor whose agreements had ended at Norfolk in the previous 3 years. 47 additional active credentials that should have been revoked. 47 accounts. Decker's was just the one that had been used. The Navy's credentialing failure was not an anomaly. It was a pattern. Here's what this tells us about the state of military administrative infrastructure in 2026. The systems that protect payroll integrity and personnel records are only as secure as the processes that manage access to them. And those processes, the checklists, the offboarding protocols, the periodic audits, had been degrading quietly for years, understaffed and under-reviewed, until a contractor with a motive and an open door walked through it. The investigation now had 2 primary targets. Decker was the architect, but the 23 ghost identities had required something Decker did not possess on his own: valid Social Security numbers belonging to deceased veterans. Investigators identified the source of the SSNs within the 3rd week of the investigation. His name was Petty Officer 2nd Class Marcus Leland, 29 years old, assigned to the Navy's Personnel Support Detachment at Naval Station Norfolk. Leland had worked in administrative processing for 3 years. His job involved routine access to veterans' benefit records and discharge files, documents that, in many cases, contained Social Security numbers belonging to veterans who had died after their separation from service. Leland had been selling SSNs. The going rate, as established by forensic review of encrypted communications recovered from Leland's personal phone, was $500 per SSN. Over a period of approximately 6 months beginning in mid-2025, Leland had sold Decker 23 Social Security numbers belonging to veterans who had died between 2019 and 2023. All were male. All had served in pay grades consistent with E5 or E6 rank. All had been honorably discharged before their deaths, which meant their records were complete, and their service histories were clean enough to withstand routine verification. The total Leland received, $11,500. For $11,500, Petty Officer Leland had enabled a $61 million fraud. Put yourself in the shoes of the NCIS agent who first ran those numbers. You're looking at a man who sold 23 dead veterans' identities for less than the monthly disbursement on a single one of the accounts he helped create. Either he didn't know what Decker was planning to do with them, or he knew and didn't think the math through. Either way, the outcome was the same. By late January 2026, Operation Hollow Muster had a complete picture of the scheme's structure. What the investigation team needed now was evidence sufficient to sustain federal charges, and a tactical plan for simultaneous arrests that would prevent either suspect from alerting the other. Decker's location had been established early. He was living in a rental property in Chesapeake, Virginia, approximately 22 miles from the base. He had no criminal record. He had maintained a low profile since his contract ended, working part-time at a logistics firm while, investigators believed, managing the cryptocurrency withdrawal operation from home. Leland was on base, which created a separate set of considerations. Arresting an active-duty service member required coordination between NCIS, the command structure of his detachment, and the Judge Advocate General's office. The command was briefed on January 29th. Leland's commanding officer was instructed not to alter Leland's duty schedule or give any indication that an investigation was underway. Investigators also faced a technical constraint during this period that nearly derailed the timeline. The cryptocurrency tracing operation had stalled. 2 of the 14 wallet addresses had been linked to an exchange platform incorporated offshore that was not responding to compliance requests through standard channels. The FBI's Financial Crimes Unit escalated the request through the Department of Justice's International Asset Recovery Division, but the process was slow. Without documentation of where the funds had moved after reaching those two wallets, the financial picture had a gap. The decision was made to proceed with arrests, without waiting for the offshore tracing to complete. The alternative, allowing Decker additional time to move funds, carried greater risk than a prosecution case that was already strong on the domestic evidence alone. The two untraced wallet addresses would remain an open investigative thread after the arrests. There was a second complication. On the evening of February 1st, 2026, one of the NCIS surveillance units monitoring Decker's Chesapeake property observed him loading a duffel bag and two laptop cases into his vehicle and driving to a storage facility on Military Highway. He spent 40 minutes inside. He returned to the residence without the duffel bag. The surveillance team did not intervene. Intervening would have exposed the operation, but the activity suggested Decker was either preparing to move or disposing of material he didn't want found at his residence. The investigation team convened an emergency session that night to review the arrest timeline. They moved the operation forward by 72 hours. Arrest warrants for Raymond Decker and Marcus Leland were signed by a federal magistrate judge in the Eastern District of Virginia at 11:47 p.m. on February 2nd, 2026. At 5:50 a.m. on February 3rd, 2026, two NCIS arrest teams staged at separate locations. The team designated for Decker assembled at a parking structure 4 blocks from his Chesapeake residence. The team designated for Leland staged inside the Naval Station Norfolk perimeter, coordinating directly with the base security officer. At 6:14 a.m., both teams moved simultaneously. Decker was taken into custody at his residence without incident. He was found at his kitchen table with a laptop open. Agents photographed the screen before closing it. The display showed a cryptocurrency exchange interface with an active session. The laptop was seized. 2 additional devices were recovered from the residence: a desktop computer and an external hard drive stored in the bedroom closet. A search of the garage produced printed spreadsheets that agents later identified as manual records of disbursement cycles and account balances. Decker said nothing when agents identified themselves and presented the warrant. According to the arrest report, his only statement at the residence was to ask if he could put on shoes. At Naval Station Norfolk, Petty Officer Leland was taken into custody at the Personnel Support Detachment office at 6:17 a.m., 3 minutes after the Decker arrest. He had been at his desk for 11 minutes when agents entered. He was handcuffed in front of 2 colleagues. Neither colleague had been told in advance what was happening. Leland, according to the arrest report, asked immediately whether he could speak to a lawyer. Agents advised him of his rights. He did not make any additional statements. Both men were transported to the Federal Processing Facility in Norfolk. Initial appearances before the magistrate judge were scheduled for that afternoon. The arrests had gone cleanly. But what agents found when they executed the search warrant on the Military Highway Storage Unit later that morning changed the complexity of the investigation in ways no one had anticipated. The duffel bag Decker had carried into the storage unit 2 nights earlier contained cash, bundled in rubber bands, counted and organized by denomination. The total amount recovered from the storage unit, $847,000 in U.S. currency. Also recovered, 2 prepaid mobile phones, a notebook containing handwritten cryptocurrency wallet addresses and access codes, and a USB drive. The USB drive, when examined by NCIS digital forensic specialists, contained a file directory with 41 additional SSNs, not the 23 used in the scheme, but 41 new ones, also belonging to deceased veterans. Cross-referencing the names against military records and the Social Security Death Index took approximately 6 hours. 38 of the 41 matched deceased veterans. 3 did not match any known individual. The scheme had not been at its final scale. It had been in an expansion phase. Decker had been preparing to insert additional ghost identities into the payroll system. The 23 that NCIS had discovered were the first iteration. Based on the volume of SSNs recovered and the pattern of the existing accounts, investigators estimated the second phase would have added between 35 and 40 ghost personnel, increasing the monthly disbursement from $4.3 million to somewhere between $10 and $12 million. The question of where those additional SSNs came from, whether Leland had provided them or whether there was a third source, became a central thread of the post-arrest investigation. Here's the take that'll probably get us pushback. The systemic credentialing failure that made this scheme possible wasn't an accident of bureaucratic negligence. It was the predictable result of years of cost-cutting in military administrative support functions, where contractor oversight positions were eliminated or consolidated to meet budget targets, and where the periodic audits designed to catch exactly this kind of access gap were deferred, delayed, or quietly dropped from operational checklists. Decker didn't find an open door. The department left it open and stopped checking if it was still there. The federal grand jury indictment, returned by the Eastern District of Virginia on February 19, 2026, charged Raymond Decker on 9 counts: wire fraud, aggravated identity theft, unauthorized computer access, theft of government funds, and money laundering conspiracy. Marcus Leland faced 5 counts: wire fraud, identity theft, unlawful sale of identifying information, and conspiracy. The indictment also named 2 unindicted co-conspirators, designated only as CC1 and CC2 in the public filing, suggesting that investigators believed additional individuals had knowledge of or participation in the scheme beyond what the 2 arrested suspects had disclosed. Neither co-conspirator had been publicly identified as of the time of this reporting. The USB drive recovered from the storage unit, and specifically the question of who had supplied the 38 additional SSNs it contained, drove continued investigation beyond the arrest phase. Leland, through his attorney, indicated that he had provided only the original 23. If that account was accurate, the remaining SSNs had come from somewhere else. What do you think? Did the institutional failure that enabled this fraud lie with the individuals who exploited it, or with the system that left the door open for 18 months? There's no clean answer. The post-arrest period of Operation Hollow Muster had 3 simultaneous tracks. The first was the criminal prosecution of Decker and Leland, moving through the federal court system in the Eastern District of Virginia. The second was the emergency audit of Navy payroll accounts ordered by the Chief of Naval Operations on February 5th, 2 days after the arrests. The audit covered 4,200 payroll accounts across 11 naval installations and was conducted jointly by DCAA, the Defense Finance and Accounting Service, and an independent forensic accounting firm retained by the Navy's Inspector General. The scope of the audit expanded twice during the first month, as investigators identified additional credentialing anomalies at installations other than Norfolk. The third track was the congressional response. The Senate Armed Services Committee opened a preliminary inquiry into the credentialing failure at Naval Station Norfolk within 1 week of the arrests becoming public. The inquiry focused not on the criminal prosecution, that was the Department of Justice's domain, but on the administrative system's failure that had allowed a revoked contractor credential to remain active for 18 months. The Navy's Inspector General was subpoenaed to provide documentation related to the off-boarding process for all contractor personnel at all installations during a 3-year look-back period. Congressional testimony began in May 2026. It was not comfortable viewing. The Navy's Deputy Chief of Information testified that the credentialing gap at Norfolk resulted from a combination of factors: a transition to a new personnel management software platform in early 2024 that had created data migration errors, a reduction in contractor oversight staff, and an internal audit schedule that had been extended from annual to biennial reviews due to resource constraints. He characterized the failure as systemic but not intentional. Members of the committee characterized it differently. Senator Patricia Whelan of Virginia, whose state includes Naval Station Norfolk, used her questioning time to walk the deputy chief through the specific checklist that had been completed and falsified when Decker's access was supposed to have been revoked. She read the relevant line into the record. Step 14. System access credential deactivated. Verified by date, March 19, 2024. She then noted that Decker's credential had not been deactivated on that date. She asked who had signed that verification. The answer, the deputy chief acknowledged, was still under investigation. The DCAA audit completed its first phase in March 2026. Among its findings, the 47 additional active credentials belonging to former contractors, identified during the NCIS investigation but set aside as a secondary priority, included 6 that showed login activity after the associated contractors' agreements had ended. None of the 6 showed evidence of fraudulent personnel entries, but 3 showed activity patterns that DCAA flagged as anomalous: logins at unusual hours, accessing records outside the normal scope of the original contract function. All three were referred to NCIS for separate preliminary inquiries. By the time the findings were made public in April 2026, the emergency audit had reviewed 4,200 payroll accounts across the 11 installations. It identified 9 additional anomalies, smaller in scale than the ghost sailor scheme, but structurally similar. Duplicate routing numbers, mismatched service numbers, accounts drawing pay for personnel whose records were incomplete or inconsistent. None of the 9 had yet been traced to criminal activity with sufficient certainty to support charges. All 9 remained under active investigation. One detail that stuck with me going through the case record. In one of the 9 flagged accounts identified during the extended audit, the service number attached to the account belonged to a veteran who was not deceased. He was alive, 63 years old, living in Tampa, Florida. He had been honorably discharged in 2009. He had no idea his service number was appearing in an active Navy payroll entry for a base he had never been assigned to, drawing pay he had never received, for a rank he had never held. He found out when an NCIS agent called him in March 2026. His response, according to the case notes, was to ask if this meant he owed back taxes on the income. He did not. The prosecution of Raymond Decker moved quickly by federal standards, driven by the volume of documentary evidence recovered in the February 3rd searches and by the cooperation structure of the case. Decker's defense team initially indicated that their client intended to contest the charges. That position changed in early April 2026, when prosecutors disclosed the contents of the USB drive and indicated they were prepared to argue at trial that the 38 additional SSNs constituted evidence of intent to expand the scheme. Plea negotiations began in April. A cooperation agreement was reached in May. The terms, as filed with the court, required Decker to provide full disclosure of all cryptocurrency wallet addresses and access credentials, full disclosure of all individuals with knowledge of the scheme, and testimony against any co-defendants identified through his cooperation. In exchange, the government agreed to cap its sentencing recommendation at 22 years rather than seeking the full statutory maximum of 34. The cooperation agreement also required Decker to assist in the identification and recovery of assets. By the time the agreement was signed, blockchain forensics had traced 11 of the 14 cryptocurrency wallets to exchanges where accounts could be frozen. 3 wallets, including the 2 linked to the offshore platform that had not cooperated with compliance requests, remained untraced. Estimated value of cryptocurrency assets in the 3 untraced wallets, $14.2 million. As of June 2026, those funds have not been recovered. Marcus Leland did not enter a cooperation agreement. His attorney indicated in May 2026 that Leland intended to contest the scope of his participation, specifically to argue that he had no knowledge of how the SSNs he sold would be used. The legal theory was that Leland's culpability was that of a seller of stolen information, not a co-conspirator in the full scheme. Federal prosecutors responded by filing a superseding indictment in June 2026 that added a money laundering conspiracy count, raising Leland's potential sentencing exposure from 12 years to 21. The trial date for Leland was set for September 2026. Decker's sentencing, pending completion of his cooperation obligations, was scheduled for October 2026. The cooperation disclosure Decker provided in May 2026 identified CC1, the first of the 2 unindicted co-conspirators named in the original indictment. The individual was a former DFAS analyst who had been employed at a defense finance and accounting service processing center in Indianapolis. According to Decker's disclosure, this individual had provided technical guidance on the disbursement system, specifically on how to structure the ghost entries so that they would pass the automated consistency checks that DFAS ran on new personnel files. The former DFAS analyst had not inserted the entries or accessed the Navy personnel system directly. His contribution had been advisory. He had explained, in encrypted messages Decker had archived, and which were recovered from the laptop seized at the Chesapeake residence, exactly which data fields required exact formatting to avoid triggering exception reports, and what values to use for fields that cross-referenced against external databases. He had been paid, according to the archived messages, in cryptocurrency. His total compensation, $340,000. He was identified and arrested on June 4, 2026 in Indianapolis. His name was not released pending arraignment. He faced charges of conspiracy to commit wire fraud, unauthorized disclosure of government computer system information, and money laundering. His arrest answered one of the central open questions that had persisted since the investigation began. How had Decker, an HR systems contractor with no background in financial systems administration, known exactly how to structure the ghost entries to survive automated review? The answer was that he hadn't. He had needed help. And he had found it. The identity of CC2, the second unindicted co-conspirator referenced in the indictment, had not been publicly disclosed as of June 2026. A source familiar with the investigation, speaking without attribution, indicated only that CC2 was believed to be located outside the United States. No arrest had been made. Will this happen again in 5 years? Drop yes or no in the comments. Because the systemic conditions that made Operation Hollow Muster possible didn't disappear when Decker and Leland were arrested. The emergency audit prompted by the Norfolk case ultimately produced something beyond its immediate findings. In April 2026, the Navy's Inspector General published an interim report recommending mandatory quarterly credential audits for all contractor access accounts across all installations, automatic deactivation of contractor credentials upon contract termination, with a documented reauthorization process required for any exception, and independent annual review of all payroll disbursement anomalies by a third-party forensic team, separate from the DFAS processing chain. The recommendations were accepted in principle. Their implementation was funded through a supplemental appropriation that, as of this reporting, was still pending final authorization. The families of the deceased veterans whose identities were used in the 23 ghost accounts were notified by letter in February 2026. The letters came from the Navy's General Counsel's office. They were 2 pages long. They explained that the veteran's Social Security number had been used without authorization in a fraud scheme, and that the family was not liable for any tax obligations or benefit recovery related to the fraudulent disbursements. Some families had questions. A few requested meetings with NCIS. The meetings were held. Most of what they asked, investigators could not answer, including, in several cases, who had originally stolen their family member's Social Security number and how it had been obtained before it reached Leland. The secondary theft, whoever had harvested the SSNs before selling them to Leland, or wherever Leland had obtained them, remained an open investigative thread. Leland, who had not cooperated, had not provided sourcing information. Decker's cooperation disclosure was consistent with his having received the SSNs from Leland and nothing more. Where Leland had obtained them, whether from records he accessed directly through his administrative function, from an outside source, or from a combination, was still being investigated. If you've ever dealt with a bureaucratic system where no one quite knows who's responsible for what, where the checklist says verified, but the thing it was supposed to verify never actually happened, imagine that times 10, running inside a classified military database, with a contractor on the other end who noticed before the institution did. The story of Operation Hollow Muster does not resolve cleanly. Raymond Decker is cooperating with federal prosecutors and awaiting sentencing. Marcus Leland is awaiting trial. A former DFAS analyst is awaiting arraignment in Indianapolis. CC2, the second unindicted co-conspirator, has not been arrested. $14.2 million in cryptocurrency has not been recovered. 38 Social Security numbers found on a USB drive in a storage unit, 38 additional ghost identities in preparation, have not been traced to a source. 47 inactive contractor credentials are now under review. 3 of them showed anomalous login activity. Those 3 cases are open. The emergency audit of 4,200 payroll accounts identified 9 additional anomalies. None have been resolved with sufficient certainty to support charges. All 9 remain active investigations. The Navy's credentialing reform recommendations are pending funding authorization. And the September 2026 trial of Marcus Leland, who sold 23 Social Security numbers belonging to dead veterans for $500 each, has not yet begun. What Auditor T noticed on January 14, 2026, was a number that appeared one too many times in a spreadsheet. She flagged it. Her supervisor told her to let it go. She escalated anyway. The number was the edge of a $61 million fraud that had been running undetected for 14 months inside the most secure military payroll system in the United States. The fraud is dismantled. The credentialing vulnerabilities that enabled it are still being cataloged. Subscribe to Case Zero. The next investigation we're covering involves a federal contractor with access to 3 different agencies and a paper trail that investigators described as the most deliberately confusing financial structure we've seen outside of a cartel case. The network ends. The conditions that created it don't.